Hello and welcome to Switzer Investing Insights, brought to you by NAB Trade. And today we're going to talk about the upcoming reporting season. Paul, what in the hell is reporting season?
So this is the time, Peter, when we find out how our companies are travelling. Most companies, not all, balance on either the 30th of June or the 31st of December. They're required under ASX rules to provide a half-yearly and a full-year financial result. All has to be done by the 28th of February. So we actually find out how our companies are travelling.
Okay, let's go into the schedule. What companies and when they're reporting?
Yeah, about 75% of all companies will report. On the screen in front of you can see a week-by-week schedule across February. You can see that this peaks in the third week of February, the week ending the 23rd of February, when 91 companies alone report. All wraps up by Wednesday, the 28th of February.
Okay, so what are you expecting and why is all this important?
Yeah, in an aggregate sense, Peter, we're looking for profit growth or earnings growth of around about 5%. That very much depends on the type of company in the sector. So, for example, in the financial sector, earnings growth around about 3%, resources only about 1%, and that's mainly because commodity prices in the second half of the year actually were down a little bit. But some of the industrials more like about 8 to 10%. Why is it so important? Because this is the thing that ultimately drives share prices. And we've seen that in January in the US, when the US market has had a fantastic run and the Australian market hasn't done a lot at all. One of the key reasons, of course, is that US companies are growing their earnings and growing their profits very quickly. And the market's responding to that. So we need in Australia to see Australian companies also growing their earnings.
And the plus out there is that the run of economic data over the last 6 months has got progressively better and better. And we hope that then translates to better company profits and then stock prices.
We've had good data, but unfortunately a lot of our companies are always been seen as growthless, particularly some of the larger companies. And that's one of the reasons why our market has struggled. So we need to see some improvement.
And I guess some companies will suffer because that damn dollar remains pretty high.
Yeah, $1 over 80 cents probably not helping. And again, it may also be more not so what's the actual historic number, how the company is travelling, but also what its forecast is. So a lot of companies will give it an outlook statement, and if anything, the outlook statements may be more important than the actual result for the half year.
Yeah, I definitely agree with that. Now let's go and look at some sectors, Paul. Let's kick off with the financials.
Look, the biggest sector, and probably the most important, simply because it's the biggest, also has been seen as growthless. The key result here, of course, is the Commonwealth Bank, the largest company in Australia. It's due to report on Wednesday, the 7th of February. Last year's, the half year, this time last year was about $4.9 billion. Maybe we'll get some increase to around about $5.2 billion. Might also get a bit of a dividend increase. But really the market's looking here very much to see, has it been able to grow its revenue? And do we have what we call positive jaws, that's operating income growing faster than operating expenses. A number of other companies also reporting, including Bendigo, Suncorp, AMP, and also National Australia Bank has a quarterly update on the 8th of February.
Okay, let's go to the really important sector that's been really doing well, namely resources.
Resources sector has been travelling really well. Again, look, the headline number here probably not so important because the companies have already had to tell the market what their production has been, and everyone knows that they can't control the price they get for it. So in some ways, the actual profit number it's not as important as perhaps as what the company is doing in terms of trying to control its costs. And also, a lot of these companies are now generating lots of revenue. So, what is their capital management policy? So, I think the market's as much looking for cost control, productivity improvements, also what are the company's plans going forward?
Yeah, I remember last reporting season where Fortescue was sort of predicting a dividend yield around 11%, and that is like an unforgettable fact for a mining company.
Yeah, very much so, and Fortescue will want to be one of those key results.
Yeah, let's go consumer staples, Paul.
Again, a sector that's really been troubled, mainly because we've had the supermarket wars. Even companies like Coca-Cola have been challenged by changes in the fizzy drink market. So we have Wesfarmers, Woolworths and Coca-Cola, the three big ones reporting. Probably again, the market will be looking more at individual factors. So, for example, in Woolworths, things like, how's Big W actually travelling, because that's been their problem child. With Wesfarmers, they've recently acquired the home-based hardware franchise in the UK, losing money. How they're going and turning that around? So the market, if anything, will be looking more perhaps at individual parts of their business. We'll also get a quarterly sales number, which will be important in terms of how they're actually travelling in the supermarket world.
All right, so Paul, let's go to healthcare stocks and also maybe some of the growth companies.
Healthcare, one of the best performing sectors over the last many years in the market. Most of our health companies provide a forecast. So again, the market will be looking at how they're going against their forecast. For an example, CSL still has forecasted for the full year profit between 1480 and 1550 million dollars US. That's an increase around about 11% to 16%. So the market will be saying, well, how's it gone in the half year in terms of profit increase? A company like Ramsay, right on the back of the season on the 28th of February, it's forecasting increase in what it calls core earnings per share of between 8 and 10%. Market will be hoping with an increase towards the higher end of that, if not better than that. And also how they update the market going forward. Is there a change to that forecast? What do they think the next half year is travelling? A lot of other companies to report. Companies look out for names such as JB Hi-Fi, Treasury Wine Estates, and think companies like A2 Milk, which have had, trading on some pretty high multiples, and the market will be really to see how they're actually travelling versus some of the expectations.
Okay, you've kind of hinted at your expectations, but what are you really hoping for our reporting season?
Well, I'd like to see better than 5% earnings growth. I hope that we're going to see more positive surprises than negative surprises, because the market needs it. While we haven't really been able to go that much above 6,000 because we just haven't had the earnings to support it, we now need to see what will look like good economic conditions translate into better company profits.
Well, I totally agree, Paul. I think what we need to see is some really good outlook statements. If we see that, I think the market will take off. That's Switzer Investing Insights, brought to you by NAB Trade. Thanks for joining us.